Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over the market, let's go over Tesla, and let's figure out what is happening and what we can expect moving forward. So as usual, if you enjoyed, don't forget to hit that like button as it does help a lot. This is not financial advice. I am not a financial advisor. And of course, my membership section on YouTube is live. The link down below for $3 a month. You essentially get my intraday thoughts on Tesla as it is moving. As for instance, we called that breaking above 244, should take us to 255, and we went to there and a couple of dollars above. But moving into a Tesla closing the day up just under 8%, putting us at about $257.50 per share, which compared to the market is finally, we can say, a nice outperformance. Now, what does this all mean? What can we expect going from here? So, also, this is why you want to be careful with some comments. I remember I saw a comment saying how it's so easy. Tesla rejected at 240. It's going to go back down to 200 or something like that. I'm paraphrasing slightly. Well, unfortunately for that person, it did quite literally the opposite. So that's why you want to be careful when people say, oh, it's going to do this 100%. They're usually full of shit. But moving into it. So this is a bit of an interesting situation. The main thing that I want to look at is going to be the daily, actually. And the daily is quite interesting. So we did obviously break back above the 21 EMA today, this morning, which was great. And then we broke above 245, which was the level of the Fibonacci level that I talked about, right? However, we're at pretty much arguably a pretty major inflection point, because if you put these bad boys down right here, you can see, right, we broke above the 245, which is a 382 level on the Fibonacci, and we came right back to the 0.5 level, which is one of my personal favorite levels. It's a very common retracement level to go to on the Fibonacci. In this case, again, this could be in theory just a dead cat bounce. But another thing that's important to note is the fact that, well, we are also right back at that 50-day moving average, and we pretty much closed right on it, like directly on it. And this is where things started getting a little more interesting, right? Do we just break right through it? Do we reject first, right? This is where it gets a little confusing. This is where you want to start throwing in a little bit of caution, right? Again, phenomenal rally, but the question, of course, is, do we just continue going from here, or do we just kind of chillax, maybe get a bit of a drawdown first, maybe come back and even retest the 240s once again that we had a bit of issues breaking back above, right? What happens next? So again, it's quite simple, right? Usually you want to play this reactively, and the reactive way to play this is quite simply if you start breaking above this or rather this 50-day moving average, right? This orange line right here. Well, then of course, I think the next level was going to be most likely up to around 265 to potentially as high as 270, which is that 618 level, which is probably the most important level for the bears to defend and the bulls to break. That is a level I'll be extremely closely watching my eye on, because this is not only where we got rejected at several times before, which led to a massive sell-off, but this will also be the level that the bears really, really, really want to defend, and the bulls really, really, really want to break, because like I said, this, if we don't break above this level, the 618 level, which is around 266, 270 roughly, this to me is just going to be a potentially a bear flag, a dead cat bounce, whichever. Regardless, the point is the fact that I think that we will get a bit more pain ahead. But if we break above this, that to me tells me that obviously pain will still come. It's not like we just break above, let's say 270 and that's it. We all go to $500 per share tomorrow and everyone's happy. No, right? All that means to me is that if, here, I'll just draw this out. How about this? So if we, let's say, come up to this level, and let's say we reject, and let's say we don't go past it, to me that means that this next move to the downside could potentially come back to even as low as 220s, and assuming, of course, we break out of this overall massive channel that we're in on the weekly chart especially, right? We showed that many times. It can be pretty bad, and that thing can get extremely ugly. And this still opens up the possibility, in my opinion, of this potential massive weekly bear flag playing out, which is much more spooky. And at the very least, we'll come back down to roughly around here, give or take, of course. Now, that's option one. Now, option two, if let's say we do break above 270, and let's say we come up to somewhere around, let's say we break above 270, and let's say we come up to somewhere around this kind of 277 level, which we got rejected back over here, just as an example. Let's say we do that. Oh, cool, we come up here. The fact that we broke above the 618 level, or in other words, 266 to 270, to me tells me that the bears didn't defend the level that was crucial for them to maintain this potential downtrend still, and we ultimately have broken this potential downtrend since the sell-off started post earnings, which is extremely crucial and extremely important. So if this were to happen, I still think obviously there would be some pain ahead. It just, instead of coming all the way down here and potentially even breaking down below and going to back to the hundreds, let's say, I think it'll be something more simple along the lines that we come back to, let's say, maybe 240. So it'll break above here, come back to maybe 240, and then we continue moving back up like this. You know what? Like something like that. Again, just a super, super duper rough example, but that's kind of the idea that I'm trying to think of, or I think of when I think about breaking that 618 Fibonacci level in terms of understanding whether or not this potential downtrend, or not potential, I mean this literal downtrend since earnings has officially ended, or is it still very much in play? I think it comes down all to this level over here, which again is also just a massive resistance level that we had many issues with before, back all the way here, and even over here, all the way over here as well, right? Just a pretty massive area of resistance. So that's gonna be probably the most important thing to pay attention to, in my opinion, in the next this week, next week as well, right? Now, going over to the 65-minute chart. Actually, no, sorry, the daily. One more time on the daily. The RSI is pointing straight up. So overall, Tesla's not looking bad. Like honestly, it's looking pretty bullish. MACD flip bullish. The daily's looking not bad, honestly, other than of course the 50-day moving average, which might stump us for a little bit, which might, you know, reject us a little bit. Maybe this is what brings us back down to the 21 EMA, or somewhere relatively close to it. Maybe the 240s one more time over the next few days, or, you know, something of the sort, and then maybe bounce off the 21 EMA, and then we finally break through the 50-day moving average. But ultimately, as of right now, the trend for Tesla so far is looking still short-term pretty bullish, even if we get a bit of, you know, hiccups in between, of course, right? But moving over to the 65-minute chart, also not looking too shabby, right? We were kind of playing in this, you know, ascending wedge, but we arguably are breaking out of it, right? Like, I can't really find a way to make this seem not that we're breaking out of it. I mean, the only other way you could potentially do is if you take this, right, which is the same duration or angle rather, and you kind of put it right against this top point right here, and then you can make an argument the fact that we can still potentially go up to around, you know, the 265-ish level, which is, you know, lines up with that Fibonacci level. So it would look something like this. Let me go ahead and redraw this one here, right? So it would look something like this, just again as a rough example. So let's take this one out from here, and this could be the channel that we're in. This is option one, right? We're in a channel that looks something like this, give or take. Right, so essentially the lines are like parallel to each other roughly, which again, if we come up to retest the top of this channel, assuming this is the channel we're in, which will bring us to around, you know, maybe by tomorrow, maybe by Friday even, to 265 roughly, which is that final level of the Fibonacci that we've been talking about ever so much, which is extremely crucial for the bears to defend and the bulls to, of course, break through, right, as high as 270. That's option one. Option two is essentially playing out what I just showed you guys with, oops, let me go ahead and remove this thing here. Oops, it would be this right here, right? It could be something like this, which we, you know, kind of, you know, bounce off of in between. We kind of got several rejections over here, and then we close off the day just barely breaking out of this little ascending channel that we were in, which in theory, assuming this is the one, of course, could be pretty bullish, right? Which means that 265 most likely is next regardless. But I think regardless of the way you look at it, I think there's a very good possibility, assuming we break above the 50-day moving average, we go to 265. We break 50-day moving average, we go to 265, maybe as high as 270, and that's where the real test comes in, and that's where things will start getting truly, truly interesting. But keep in mind, Tesla does have a pretty unfavorable September, which is literally around the corner. I believe it even starts Friday, actually. Yeah, we have only 2 days left of this month. September is the worst month for the market as a whole, not just Tesla, pretty much the market as a whole, SPY, QQQ, Apple, etc. Right, not a good month. Unfortunately, Tesla's October is also has been historically, which you can't see, not a very good month as well for Tesla. So, you know, keep that in mind, right? That is important to understand. But on the flip side, November is one of Tesla's best months, right? So keep that in mind. Obviously, it doesn't mean it has to be a red month. Obviously, this could be the anomaly. This could be that time that it's obviously a green month. Absolutely possible. But if you're looking at strictly percentages and, you know, probabilities, if you will, not a good month for Tesla the next 2 months coming up. So keep that in mind. But that's kind of the main thing I'll be looking at, right? Taking a look at options flow very quickly as well, actually, which is important to take a look at over here. We're going to be taking a look at it with a little bit more premium, of course. And you can see, compared to yesterday, a lot more bullish flow, right? A lot more green circles for the shorter term, right? For September, you can see coming in here, even a bit of October as well. A lot of bullish flow coming in. A lot of people are betting on more upside, which tells me that 260s is probably a very real possibility. Like, it really looks like 260s is going to be, you know, it's looking quite likely, right? I still think we need to break above that 50-day moving average. That is going to be the one thing that can still smack us back down a little bit to the 240s potentially, and one more time. But based on the options flow, it's looking bullish. It's looking substantially more bullish than bearish. So people are definitely betting on further upside to continue potentially for this week, or at the very least for the next couple of weeks, right? It doesn't have to be necessarily tomorrow or the day after or even this week, but maybe this week probably next week for sure, if not this week, right? Short term, so this week or next week, people are still betting for more upside. So keep that in mind. Now, the one thing to very carefully pay attention to as well is going to be the RSI. Like we said on the daily, the RSI pointing straight up, looking not too shabby whatsoever. However, 65-minute chart you can see, which is essentially the 1 hour chart, it's overbought. It's substantially overbought. It is way, way overbought. And of course, every time it has entered overbought territories, it of course has ultimately corrected back down. And we are once again in that period right here, which is why I said it wouldn't shock me whatsoever if we get a bit of a rejection at the 50-day moving average, maybe go sideways, maybe come back to the 250s, like the low 250s, maybe even the mid 240s roughly, get some consolidation, kind of regroup, maybe for the next half a week or something like that, maybe a week at most, before we make our next rally up and continue this rally and continue this momentum and let the RSI sort of cool off. That is very real possibility as well. So you want to kind of adapt and, reactively play this as it plays. This is going to be a very hard one to just straight up predict. This is more of a reactionary play in my opinion. Now, one potential bearish thing that I see right away from this is not ideal is going to be that this could just be a cup and handle pattern too, right? Ever since we had this 212 over here, we kind of based a bit. This could be a massive cup right here. You can see we pretty much came right back down to the exact same level. So this just could be a massive cup, and this could just be nothing more than the handle that we are currently forming. So that's something else to pay attention to. So there's still a lot of uncertainty here. I wouldn't be, jumping out of my chair, screaming bullish, everything's phenomenal, Tesla to all-time highs. Not yet. I really would be still cautious personally, especially after a rally like this. And the main reason, again, is because we still have yet to break that 618 level of Fibonacci, being, of course, 265, 270. It's crucial we break that, extremely crucial we break that, because if we break that, that also starts really kind of faltering out this cup and handle pattern, because the handle can't go that deep into the cup. So that's important to understand, right? If we break above it, of course, but if we don't break above it, there's still a chance that this handle is still very much active or valid, I guess is the better word. So that's something else to understand, right? This cup and handle right here can potentially still be quite bearish. On the flip side, a lot of people were pointing out this overall head and shoulders, right? This being the left shoulder here, this is the head, and this is the right shoulder. And they're like, oh, or like this whole area is the right shoulder, which makes no sense. I think that's just completely just incorrect, because I think this head and shoulders already played out. That was a sell-off to the 100 level. And in fact, I would argue the fact that we're potentially even setting up a bullish inverted head and shoulders, this being the left shoulder, this obviously being the head, and this of course being the right shoulder right over here. And I would argue that that's a lot more of a potential valid pattern, which is a bullish pattern, than the overall bearish head and shoulders that, in my opinion, already played out, which was this right here. So anyways, thought that I'd point that out there. I saw some people pointing that out on social medias and whatnot, so just thought I'd point that out. But we're in for a very interesting period, guys. So this is definitely an area to be very, very cautious, very careful. Don't get too greedy. Just my opinion, not financial advice. And I think there's still a lot of areas that Tesla stock needs to prove itself before we can really confidently be like, yes, I think it's time to truly get a rally out of this overall congestion zone of the 200s, and we can make our way into the 300s. I think it's too early to call a victory for that. We need more confirmation, in my opinion, because this could still just be nothing more than a bearish pattern overall. So overall, that's what I am seeing. Let me know what you think down below. Thank you so much for watching. See you for the next one. Peace.